review of the markets, Bankole, how have they performed today? It's definitely better than yesterday's session.
Yes, market closed positive today because we had the companies outside the banking sector do very well today. I'm talking of companies like Nigerian Cement, Dangote Sugar, and then Bankole. This is very good for the Nigerian Stock Exchange because it's a little bit of a shift from what we had in the past, where banking stocks just dominated the level of activity. I'll go on further to say that there's been increased level of activities since they increased the duration of trade from 2 to 4 hours. We've had increased level of trade to about the tune of 32%. That's increase in volume done daily.
Okay, we're seeing the Naira in the region of 152.45. Is it due to dollar weakness or something positive happening inside Nigeria for the Naira?
Yeah, what we've seen is that CBN, that's the central bank, has not been able to meet demand with a deficit of about $50 million. Even then, oil companies sold some dollars this week to meet some of their Naira obligations. So this has helped in the stability the Naira is currently experiencing, even though on the interbank today it closed at a devalued amount of about 152.45 compared to what it did last week at 35. This is just a reflection of what happened at the UBA auction on Wednesday, where we've had a devaluation of 9 kobo. This is not too bad, it's a marginal one. It usually reverses week on week.
Talk to us about the Tbill auction and its impact broadly on the fixed income market.
Yeah, Tbill auction. There was Tbill auction on Wednesday across all maturities, 91, 182, and then 364. Total of over 70 billion naira was issued, and then yield dropped at the auction because counterparties all over that in the banking sector and outside of it feel that these T-bills are at very, very high yields. There's good appetite for them. Despite liquidity drying up in the money market, we saw people coming in bullishly, and then they bought and dragged yields down further across all maturities.
Okay, just explain to us this attractiveness of some of these T-bills. As you're saying, there's a lot of interest. Why is that?
Yes, what had happened in the second half of last year was that when investors tried to diversify away from fixed income because there was a little bit of, I won't say glut, the government issued a lot of bonds and T-bills last year. So people tried to sell down on what they had, take profits and move to other forms of investment. Yields had grown up, price dropped. What we're experiencing now is the yields are very good, especially on the short term, at around 8.5 and 9.5% compared to what you would do with placements at the banking placements and all that. So investors continue to buy them since they short maturity, and then yields are very good. This also applies to what's going on the bond market too.
All right, now you mentioned liquidity in the interbank market earlier on, and there have been some concerns, Bankole, as to the fact that because of the rise in interest rates, it's made the cost of borrowing a little bit expensive, and we might see sell-offs in this particular area of the market. How do you explain that, respond to that, and have you seen that?
Sorry, come again, I didn't get that.
I'm saying that there are concerns about liquidity in the interbank market after the rise in interest rates. There's a fear that there's going to be a sell-off. Do you believe that would be the case?
No. We expect that federal allocations will come in next week to ease the pressure in the interbank money market. There's a public holiday on Tuesday. Before or after that public holiday, we expect federal allocations to trickle in. Although there will be deductions from, when CBN sells dollars at the interbank also, this will cause deductions, and then we expect a bond auction Wednesday too. There's a bond auction, even though the volume is not so much this time around compared to what we did all through last year, towards the end of last year. So I expect pressure to ease off on the interbank market starting from next week.
Okay, we know there's going to be the public holiday next week, but generally trends going into the following week?
Yeah, generally we see the dealers in the fixed income market continue to be bullish, except we find very, very large sums coming. People have been bullish even when money dried up in the system. This is because of these very high yields, as I said earlier, across all maturities, 1 year, 3, 5 to 20. You still have bonds at 12.6 and 20 years. This is seriously higher than inflation. So if you benchmark that to inflation, it's higher than inflation, and then you'd rather get those for keeps.